Hello and welcome to On Watch by MarketWatch. I'm Jeremy Owens. Donald Trump won the presidential election, but in the world of investing, there was another big winner, cryptocurrency. The crypto industry spent millions to flip the Senate to Republican control and support Trump, who recently switched his stance on crypto. So what does a Trump presidency mean for cryptocurrency? And should you be investing in it? That's today on the show. Plus, we'll tell you about the news we're watching this week and how it will impact your wallet.
We're already seeing crypto rally a lot so far after Trump was elected as the U.S. president.
That's Francis Yu, MarketWatch's crypto reporter.
For one thing, Bitcoin has kept refreshing all-time highs, and we see other smaller coins rally as well. And I guess people are pretty excited about the future of crypto under the Trump presidency because he has made a lot of promises to the industry. People are generally looking forward to a more friendly regulatory environment in the US, including a SEC that is more friendly and more clear regulatory framework.
Donald Trump's pro-crypto stance has supported a massive rally for crypto after the election. Bitcoin surpassed $90,000 for the first time, and Dogecoin more than doubled in the past couple weeks.
I guess that has to do with the news that Trump is creating this new Department of Government Efficiency, and he's going to appoint Elon Musk as the head. That's why a lot of crypto traders are buying it right now.
That really feels like 2019 and 2020 and 2021 all over again. Doge spiking just because of a funny meme.
It is pretty interesting because as a meme coin, Dogecoin is mostly traded by retail traders. So I guess its rally kind of signaled the comeback of retail traders. And I think tokens in the sector of decentralized finance are likely to benefit the most from a Trump presidency because right now we don't really have a very clear regulation around DeFi. And now people are really looking forward to more clear guidelines around how decentralized finance could be regulated. And even Trump himself has been actively participating in the decentralized finance project. So people think he's going to be particularly friendly to DeFi.
Yeah, well, so talk to us a little bit about DeFi, why it fits in here, and is that the type of coin that Trump himself is selling? World Liberty is the crypto that has been developed under Trump's name.
That's a great question. So decentralized finance is kind of an umbrella term that refers to the technology relies on blockchain and tries to eliminate middlemen in finance. We've seen different types of DeFi applications right now. Those are used sometimes for trading and also for liquidity providing and even for lending. So for Trump, he's backing a project called World Liberty Financial. That's got a lot of media attention, but to be honest, it's not very clear what's the purpose it serves and what kind of real utility it could provide. It seems like it's trying to develop a decentralized finance platform that allows people to borrow and lend crypto, but we're still yet to see what kind of real use case it could provide.
Francis, you mentioned retail interest in Dogecoin. I'm really interested in individual investors and if they're jumping back into crypto. After the FTX collapse and everything, it seemed like the interest in trading in crypto among normal folk just kind of drifted away a little bit. Institutions jumped back in and got a lot of this crypto when it was dirt cheap, and now they're sitting there waiting for the individual investors to come back and juice this market again.
That's very interesting because we're already seeing some signs. One thing as we've talked about is the rally of meme coins. And I've also spoken to some crypto exchanges and crypto brokers that target retail users, and they've seen a surge of their volume in retail trading recently.
Yeah, Francis, I'm fascinated by this. Of course, Bitcoin and Ether, the main cryptos, are going to be helped by this, but most speculators are looking at smaller altcoins, meme coins, things like that. I mean, it seems like a very similar setup to what we're seeing in the stock market right now, where obviously like big tech and the most valuable companies have gone up since Trump got elected. They haven't gotten the huge surge because people think they're already pretty properly valued. And then there are the small caps. That's what's happened in the stock market, is traders have started swiveling away from the S&P 500 and the big dogs to the small caps. And it seems like you're talking about a very similar setup in the crypto industry where Bitcoin and Ether, they're probably going to be helped, but they're already pretty well valued. And it's the altcoins and meme coins people are looking for that value.
Yeah, exactly. I really liked how he compared the rotation into small caps in stocks to the rotation into altcoins in crypto because there are a lot of similarities between this. And it's kind of a natural trend you really see in this part of the crypto cycle. Because now Bitcoin is already at all-time high, people are looking for even more return. So they're looking into assets that are riskier, but also could offer higher returns. We've already started seeing Bitcoin dominance going down a little bit. There's still some back and forth, but a lot of people saying that it's going to continue to go down. For a lot of smaller coins, even the Dogecoin we mentioned, it's still pretty far away from its record high they reached in 2021 or even earlier.
And what about the exchanges, Francis? Coinbase dumped millions into this election for exactly this type of outcome. Crypto-friendly politicians coming into Capitol Hill. I have to imagine that it's the exchanges that are happiest with this result.
Sure. I think crypto exchanges are pretty excited, especially Coinbase and Robinhood, because the SEC brought charges against Coinbase, and it also issued a wealth notice to Robinhood's crypto unit, which means it might bring legal actions against the exchange, accusing them for providing this platform trading unregistered securities because they allege that all those crypto tokens are securities. So those exchanges are pretty happy because now under the Trump presidency, it's very likely that he's going to appoint a new SEC chair who's probably going to be more friendly to crypto. So all these charges or wealth notice the SEC issued in the past are now up in the air.
I want to hone in on the question of regulation. We reported ahead of the election about how much Coinbase and other stalwarts of the crypto industry were spending in an attempt to remake Congress and pass fresh crypto legislation. Just as a reminder, Coinbase, Ripple, and others were major contributors to a super PAC called Fairshake, which is a pro-crypto group that spent over $130 million in this election cycle. The outcome of this election and regulation don't just matter for the current crypto rally, though. They matter to the future of the currency and what it means to invest in it. We talked to Chris Matthews, a Washington correspondent here at MarketWatch, to unpack where we are as a nation with crypto regulation.
This industry has come all the way back from what looked like the dead in a couple of years. And, a lot of that came down to all that money they spent. And when you spend money in Washington, people start listening.
Earlier this year, the House passed the Financial Innovation and Technology for the 21st Century Act, legislation that would overhaul how crypto is regulated. It's part of a larger story for the federal government, which has struggled to regulate crypto in large part because of conflict over how to treat it.
So a major factor in financial regulation in the U.S. is whether you are considered a commodity that's regulated by the Commodity Futures Trading Commission, or whether what you're issuing is a security regulated by the Securities and Exchange Commission.
The big question here is whether crypto is a commodity or a security. Commodities are typically goods, raw materials, items like gold, oil, wheat, while securities typically represent an ownership stake in something like a stock. And it gets murky with digital assets. It's not a material good per se, but it's also not always treated like a stock. There can be legitimate arguments for both in the wide world of crypto. So the question is, how do we determine if a specific cryptocurrency is a security or a commodity? And that will determine which regulator oversees it.
And so that's really the major issue here is how decentralized is a project going to be? And is it decentralized enough that regulators can be confident that they don't need the same type of regulation that a stock or a bond or some other security would?
And how might new regulation, specifically the Financial Innovation and Technology Act, impact existing coins like Bitcoin, for example?
What's sort of ironic is Bitcoin already succeeded in sort of being thought of as a commodity by the regulators. And so how much is regulation really going to change for Bitcoin? And in fact, if this bill passes, you're now going to have the CFTC regulating the spot markets in Bitcoin on exchanges like Coinbase. And so it actually probably means potentially more regulation for Bitcoin. And I think the other thing to watch is that right now the industry and all the boosters are really united. They have this common enemy in SEC Chair Gensler. Once that goes away and once regulation is actually a real possibility, I think you're going to start to see the industry splits in terms of what they want. And depending on who's sitting in these agency chairs, you could get a really tough CFTC regulator that could be just as much of a headache for the industry as Gensler.
Yeah, it's not a monolith here. There are some pro-crypto Republicans, but there are Republicans who aren't into this either.
Yeah, and so, you can always bet on inaction in Washington winning the day. But what's perhaps even more important is that now with the Trump victory, we're almost certain to get somebody in the SEC and at the CFTC who is much less interested in aggressive regulation, not just on crypto, but on the entire industry.
Well, currently the only way to kind of delineate between what's a commodity and what's a security in the wild west of the cryptocurrency industry is something called the Howey test.
This is the test to determine whether something is a type of security called an investment contract. And this is what the SEC is saying that these things are, that they're investment contracts, because somebody has invested money in this project. They expect a profit from that project. And the profit is going to come by the work of some group of people.
That sold them the investment contract, usually.
That sold them the investment contract, right? So that's the test right now that sort of determines whether a crypto token is a security. At least that's the test that the SEC wants to use. All this litigation is still up in the courts right now, so we don't exactly know how this would play out absent, more legislation.
The thing that always confused me there was, where is the expectation of profit coming from? If the issuer of a cryptocurrency is not telling the customer they should expect a profit, then it comes down to whether the buyer expects a profit when they buy it, and the issuer can't know the buyer's intentions. That's where we really get into some weirdness here, and it's really going to be a tough thing to figure out.
Yeah, and you start to see really the difference in time scale between how courts work, how regulators work, how lawmakers work, and the time scale on which cryptocurrency evolves and technology evolves. And that's not a problem that's just a crypto problem. That I think is a problem throughout technology and how we try to regulate it.
We're going to take a quick break. Coming up, should you be investing in crypto? Welcome back. Look, I know what you might be thinking. We're in a big moment for crypto. Should I invest right now? Well, the industry is kind of waiting to see if you will. Since 2022's FTX-inflected crash, the industry has lost a lot of its individual traders, which has led to a big question: when will they come back? So I sat down with Gordon Gottsagen, our retail investing reporter, to try to find an answer. And how much of these gains are individual investors, so-called retail investors? I mean, I know when Bitcoin fell down into the 30s and 40s, a lot of institutions moved in and camped, basically waiting for those individual investors to come back. Are we there now? Is this still just mostly institutional trading and individual investors are still kind of on the sidelines waiting to see when they jump back in?
Well, I would say that individual investors are starting to come back. It hasn't reached the point that it was in the pandemic in 2021. Crypto attracts these younger retail investors who are making these speculative plays, trying to catch on to this next big thing. I've spoken to some of the brokerages, and some are seeing people start to move money into crypto, but not all of them. We're still kind of in the early stages, and I think that retail investors often have memories of the assets that performed really well for them, but also the ones that kind of burnt them. And they have to get over those initial feelings in order to feel comfortable and safe putting money back into crypto the same way that they did during previous spikes.
Yeah, and that's really what I want to talk about. How comfortable and safe can this be? I mean, we like to talk about building wealth for the long term and not just jumping into risky trades. So are there ways to invest more safely in crypto? I mean, I know we now have Bitcoin ETFs, Ethereum ETFs. What are all the ways to invest in crypto without, trying to ride the Dogecoin wave?
One really interesting thing that happened while Bitcoin was in these lows was the rise of Bitcoin ETFs. And in the past week after the election, we saw $6 billion flow into these crypto funds, which is a record high. If you want exposure to that without committing too much of your portfolio, there are things like Bitcoin ETFs, Ether ETFs, and ways to just allocate some of your funds to that. But because it's such a volatile asset, because it's something that's speculative, you just want to be a little bit careful how much of your portfolio you put towards that. Wealthfront, robo-advisor brokerage, caps their portfolios for their customers at 10% crypto for the entire portfolio. So, yes, you can buy crypto, but I think the institutional players are still saying that this is a speculative trade. If you're a crypto investor, you have to be comfortable with that. You have to know that, okay, I really believe in this technology over the long term, but it hasn't gotten there yet.
Yeah, it hasn't. And what has happened in the past couple of years is the ETF approvals have kind of given Bitcoin and Ether their own little tier among cryptos. And that I feel like was a pretty good thing. But now with regulation probably being very lax is the nicest way I can say it. Does that open up more cryptos to the individual investor that could think this is not a plaything? This is actually something I'm investing in as an alternative asset to standard equities, bonds, etc.
Yeah, potentially, but I would still be careful. I think that, as you brought up, those bigger cryptos, Bitcoin, Ether, the ones that have been a little bit more tried and true, are maybe still the best ways to get exposure to crypto if you are an investor. But that doesn't mean that the smaller cryptos can't catch up. They might. But if you think about the reaction to 2020, 2021, when crypto was really having that heyday, we saw such strong regulations try to crack down on smaller cryptos. There were a lot of cryptos that were pump and dump schemes, and that really hurt the industry as a whole. So maybe it's almost for the best that we're not letting crypto truly be the wild, wild west, because you don't want those illegitimate money-making crypto schemes to really influence what the industry as a whole can offer. But again, if you're an investor, maybe hesitate a little bit before you latch on to a smaller crypto.
Well, what I really want people to take from this is that if you're looking for alternative assets in your long-term portfolio, it's fine to consider crypto right now, but realize how it acts differently than other alternative assets and the risks that are inherent in this type of technology.
I think if you talk to any financial advisor, they will still say that it's still a skeptical investment. UBS has a recent quote. They said, "We continue to view crypto assets as a speculative trade rather than a strategic investment." If it's something you just want access to, you just want a little bit of exposure, then make sure it doesn't overwhelm your portfolio size, because we've seen it so many times where Bitcoin just loses half of its value in a couple months. And if you're just trying to invest and then get burnt by crypto and want to walk away, then it can be really painful.
Well, Gordon, thanks so much for joining us. We really appreciate it. And we'll have you back on to talk about more in the future.
And thank you, Jeremy. Till next time.
Before we go, it's time for What We're Watching, a look at the news you need to know for the rest of the week and beyond. NVIDIA proved the AI boom is continuing for its graphics chips. Revenue nearly doubled in the most recent quarter to $35 billion, and profit more than doubled to $19.3 billion. Now look, that is a net profit margin of more than 50%, which should make your eyes pop. While the forecast did exceed Wall Street expectations just slightly, it didn't come anywhere close to the exuberant beats that NVIDIA has posted in previous quarters. But here's the read-through for the average investor. While the stock may waver on this forecast, there's nothing in this report that says the AI boom at NVIDIA is about to stall out. Donald Trump continues to make his cabinet appointments, and he's getting to the secretaries that will have the most direct impact on the economy. He named Cantor Fitzgerald Chief Executive Howard Lutnick his Commerce Secretary. The Commerce Secretary is in charge of trade, and Lutnick has been on TV a lot as a surrogate for Trump in recent weeks, specifically talking about Trump's plans for tariffs. Lutnick was also a candidate for Treasury Secretary, which basically acts as the chief financial officer of the United States. So it's an extremely important position that will determine a lot about the economy moving forward, and will work closely with Lutnick and the U.S. Trade Representative on leading Trump's tariffs charge. Ahead of the Thanksgiving holiday next week, we will receive a lot of fascinating economic data that should tell us how the American consumer is experiencing the economy as the holiday shopping season approaches. I'm really keeping my eye on Wednesday, when we get the Federal Reserve's preferred inflation gauge, the Personal Consumption Expenditures Index, or PCE, and we'll be back to talk about holiday shopping next week. And that's it for this episode. Thanks to Francis Yu, Chris Matthews, and Gordon Gottsagen for joining us. To keep following the latest on cryptocurrency, head to marketwatch.com. If you like what you heard, please leave us a rating or review. It really helps others discover the show. And let us know what you want to hear from us. You can reach us at onwatch@marketwatch.com. The show is hosted by me, Jeremy Owens, and produced by Alexis Moore. Isaac Gaines mixed this episode. Melissa Haggerty is the executive producer. We'll be back next week, and until then, we'll be watching.